I am fairly positive about the economy. I mean, I guess the short-term indicators are not bad at all. The things like the zeitgeist actually are a source of investment growth. And I know oil has been a bit of a drag, but, that's picked up now. And, OK, there are debt worries. I know we have to keep an eye on those, but I don't think they're deep enough to actually knock everything off course.
I think I'm probably more cautious than you, Giles. I mean, in the US, we might have a rebound in the third quarter, but probably the fourth quarter will moderate. And I think forecasts are being revised lower. The IMF cut its global growth forecast, and also for the US, by 0.6% for this year.
Well, with a mere 2% growth in world trade as a volume, and that's one of the reasons of this reduction in overall growth, I think that's one of the major concerns right now, that world growth in trade is really slowing dramatically. I think there is a lot of transition going on there. Chinese economy is moving towards more consumption-driven kind of growth, and also the overall supply chain is being changed in its whole purpose of being segmented around the world. But that's more due to transitional period than just a real concern for me.
You see, to me, that says that the world economy, it is growing quite slowly, but it's not kind of going off the edge of a cliff. And in fact, if it were growing much faster, I think we'd be at risk of quite an inflation risk, because you are beginning to see some of those inflation numbers ticking upwards. But look, let's kind of try and translate that into something for the markets. I mean, Stefan, what's your feeling there?
So I'm still very comfortable. If you just look on the PEs, it's not overvalued. US a bit, but in Europe we are in line with the history. So for me, there's a big potential still there. I
mean, give us some actual numbers. When you say, not bad, what do you mean, as it were?
Yeah, so S&P 500 in the US as a broad index is at a PE of 18.2. That's above the average of 14, a bit above 14, 70-year average. And in Germany, for example, if you look on the DAX, we are at 13.6. And the average is also a bit above 14. So that's the reason why I more prefer Europe and Germany than the US.
Yeah, I tend to agree. I mean, even if we have a little tick up of yields, I mean, on average, we're really staying very low in terms of bond yields by historical standards. So P ratios are likely to remain rather high, and there is a potential to gain some points there.
So my arguments from the last show. So if you put the interest rates into the valuation models, everything on the equity side is cheap.
Mm-hmm. And I think risk appetite's gone up as well. According to the IMF Financial Stability Report, they point to that as in October compared with April. But they also say that credit risk has gone up, so we mustn't get too over-optimistic about the outlook, I think.
Well, thanks everybody for a very good discussion. Now let's bring it all together into the Werthstein index. Valerie, what's your view?
Oh, Giles, I'm still cautious. We have too many uncertainties by the end of the year, political, economics. I still have to take that into account and look at what the IMF is just saying.
Thank you. Yeah, understood. Stefan.
Yeah, but when the uncertainties away, the market is already up 20%. So I'm very optimistic because the fourth quarter started now, and from the statistic point of view, that's the best quarter for equities.
Yeah, but often it comes down. Anyway, Christine.
Well, I'm with Valerie, I'm afraid. I'm much less optimistic than Stefan. I think there's a lot of uncertainty around US elections coming up, European issues next year, and also, of course, Brexit dragging on sentiment.
And you see, from my perspective, I am more optimistic for the medium term, but I just think we've got to get through even the next 1-2 months, not just the election, but the movement to the Fed beginning to raise rates. Anyway, look, let's try and pull these different things together. Valerie, let's move to the actual vote. And remember, it's between 0 and 10. 0 is more cautious, 10 more optimistic. Please.
Giles, I'm neutral this time. It's a 5.
Thank you.
So
Stefan.
I'm expecting a year-end rally, and so I'm on a 9.
It's quite big, yes?
And I'm more cautious, but rather less cautious than last month. So 4 for me.
Thank you. Well, and I also am on a 4. That's the same as I had last time. So if we pull it together, well, that's 22 in total for the Werthstein index, which is a little bit higher than 19 last month, but it's still way below the possible maximum of 40. And I think that does reflect an overall degree, not just of caution, but also quite a lot of difference among the panel, ranging all the way from 9 down to 4. And that suggests to me that although in the medium term things could come out pretty well okay for stock markets, there could well be some turbulence in the short term. Let's see what we get for the Werthstein index next month.